So use it. All right. All right. Here we are. Yesterday we talked about the engulfing bar candle pattern, right? After we've discussed on several things, we focused on the engulfing bar strategy, which is, the engulfing bar candle pattern. And I showed you what the engulfing bar looks like. And I also asked you to go identify the five engulfing bar candles on one day, on daily time frame and 4 hourly time frame, which some of you did. And I hope you understood it better when you did that. And we have the bearish engulfing and the bullish engulfing. So now talk to me, guys. I need to hear from you. How, when the bearish engulfing bar happens in the market, what does it signify? I would ask Ezekiel, what does the bearish engulfing bar signify when it happens in the market? Ezekiel, unmute.
Come again with your question.
My question is, what does the bearish engulfing bar signify when it takes place in the market? Ezekiel.
Okay, Ezekiel.
No, we can't hear you. We can't hear you.
How come you can't
Your
hear?
voice is something like this. It's somehow dim, it's very low.
Okay, my voice is low.
Yes, ma'am. It's dim.
Mute your mic, please. Can you hear me now?
Yes.
Okay. So Ezekiel, can you hear me now?
Yes, I can hear you.
What does the bearish engulfing bar signify when it happens in the market?
It's bullish or it's
What does
bearish.
it show? Yes. Did you do the assignment?
Yes, I did it.
Good. So what does this signify?
It shows if the market is bullish or bearish.
My question is, what does the bearish engulfing bar show in the market?
I can't hear you.
Can I try?
Can you hear me?
Tell him my question. Tell him my question.
She says the bearish engulfing bar, what does it signify? As in, when you see it in the charts, what comes in your mind? What do you think will be the next movement of the charts?
Okay, when there's a bearish engulfing candle.
Yes.
Okay, it means that the market is selling, like it's dumping.
So it means that the market is about to dump.
Yeah.
Okay. So at that point, when mute your mic, whose mic is open, please, you're stressing my ear. At that point, when you see the bearish engulfing bar, at what point do you see it? Is it on a bearish trend or on an uptrend that you see it before you know that a dump is coming? So anyway, let's go on.
Yeah, uptrend.
Good, on an uptrend, that's good. All right, so let's go on. You were able to identify the bearish engulfing bar, and you were also able to identify the bullish engulfing bar. So anybody have any question on that one, on this particular one? Is there any confusion?
Ma.
Yes.
Hear me?
Yes, go on.
Okay, I observed like not like it didn't signify either bullish or bearish sometimes. So I don't know, maybe there are some
Yes,
uh,
it's not all
rules or
bearish
something.
engulfing. It is not all bearish engulfing bar or bullish engulfing bar that will change the market. We
Yeah,
read it
I
yesterday.
observed that.
Yes, it's not all of them that will change the market. It is by the intensity or the strength of that bar that will know, that will check, that you will see to know. That is why you need to confirm it with other things, other tools before you make your move as a trader. Remember yesterday we talked about it. He said when this pattern occur, it indicates a trend reversal. Okay. Now we talked about it. You can't trade any bearish candlestick pattern you find on your chart. You need other technical tools to confirm your entries. You see, because it is not all the bearish engulfing bars that actually will change the trend of the market. Remember, remember that a bearish engulfing bar is supposed to change the trend of the market. But it is not all the bearish engulfing bar that you see on your chart that changes the trend of the market. Not all. So you need to also confirm it with other tools as we go on. Same thing with the bullish as we go on. All right, so we go to the next one. We also treated the bullish engulfing bar. You understood that one as well, right? Any question on the bullish engulfing bar? No question. Okay, so let's go to the next bar, the next one, the Doji candlestick pattern. The Doji candlestick pattern. So I read, Doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price, which means that there is equality and indecision between buyers and sellers. There is no one in control of the market. So the Doji candlestick tells you that there is indecision in the market. The market does not know whether it wants to go up or down. At that point, as a smart trader, you do not enter the market. All right. Now, this is how a Doji candle looks like. It looks like a plus sign or a cross. It does not happen up here. You can see my cursor. It doesn't take, this Doji happens at the middle. This cross happens at the middle. Now, because remember, Doji is an indecision. It tells you that the market opens and closes at the same point, right? That means that the market opens here, went up to this point, and then came down again, went down to this point, and started coming up again, and then closed at the same place where it opened. So if somebody entered the market at this point, the thing went up, the person was in profit. Before you know it, the thing goes down, boom, the person goes into losses. And the next thing, the market comes back to the person's entry. And the person leaves the market without anything. The person will actually lose some money because he will have to pay transaction fee, have to pay trading fees. You see, so at this point now, it's an indecision. So when you see this kind of sign, you are expected to wait. Now let's go on. As you can see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction it will take. When this pattern occurs in an uptrend, listen, when this pattern occurs in an uptrend, it indicates that the market is likely to reverse to a downtrend. When it occurs in a downtrend, it indicates that the market is likely to reverse to the uptrend, but no one is actually sure. So you don't enter a trade at this point when this sign, when you see this sign, you don't enter a trade because you don't know where it's going to. It is likely to go uptrend or downtrend, but you need confirmation. Now, this is where the doji happened. Remember, I told you that the white candlestick represents what? What does the white candlestick? Sorry? The white one represents what? Bullish.
Uptrend.
The black one represents bearish. Good. So the market was going up. The market was going up. And then after this candle here, the next thing that formed was a doji.
Bullish.
Mute your mic, Ezekiel. When a doji happened, the next thing that formed was a full red candle or black candle. And at this point, there was a reversal in the trend of the market. It began to go down. So now the chart above shows how the market changed direction after the formation of the doji candlestick. The market was trending up. That means the buyers were in control of the market. The formation of the doji candlestick indicates that the buyers are unable to keep price higher and sellers push the price back to the opening price. This is a clear indication that a trend reversal is likely to happen. Remember always that a doji indicates equality and indecision in the market. You will often find it during periods of resting after big moves, higher or lower. So when you see Bitcoin has moved from 110 to 120 to 130, the next thing you see that the movement of the market will be slow. The next thing, a doji will form. When a doji forms, what do you expect? Chigozie, what do you expect? A reversal. Reversal to what point now?
You say?
Reversal to which side?
The downtrend.
Downtrend, because it has been pumping all along. When it happens at that pumping stage, after some time, the market was now slow and then a doji takes place. The next thing, it will start going down. Right? That's what happens. He said, remember always that a doji indicates equality and indecision in the market. You will often find it during period of resting after big moves, higher or lower. Now, same thing happens if the market has been dumping, and then after some time, there is a resting period where the market is not pumping, it's not dumping, maybe for few hours or few days. The next thing, a doji happens. The moment that doji happens, expect the market to start doing what? Pumping up. So it's a sign that shows you that the trend is about to change. When it is found at the bottom or at the top of a trend, it is considered as a sign that a prior trend is losing its strength. So if you are already riding that trend, it's time to take profit. So if you were trading on an uptrend and you see a doji sign, you are supposed as a smart trader to leave the trend. It's that you leave the trade and wait for the reversal to take place. It can also be used as an entry signal if it is combined with other technical analysis. Are we together now? So let's go and check a doji. Are you seeing my screen?
Yes.
Good. Let's check out a doji. This thing is not supposed to be difficult. Oh, all right. Let's check out a doji. Okay, you can see my screen now. This is not. Let's change it to Bitcoin. Okay. You can see my screen, right?
Yes.
Okay. This is Bitcoin, and we are under a 4-hour time frame. So let's check out what's the latest. This is the latest Bitcoin movement under the 4-hour time frame. Let's check out if we can find a doji here. Can we see any doji here? What about this? Is this a doji? Are you seeing my screen?
Yes, ma'am.
Yeah.
Are you guys following? Do you understand what I'm doing?
Yes.
Apart from Chigozie, does any other person understand what I'm doing? Ezekiel, do you
Yes,
understand what I'm doing?
Yes, ma'am.
Ayo, do you understand what I'm doing? AY, are you in this class or you have left? Prime, do you understand what I'm doing? Okay. All right. This is a doji. So when this doji happened in an uptrend, what happened? There was a downtrend. But this downtrend did not change the trend. It was a reversal as soon as possible that took it up before the main trend began to go down. So if we look at this, we will still say that this doji actually held. Even though there was an uptrend after it, the trend came down again. So look at where it is. So if somebody had entered a trade at this point, if somebody had entered a trade at this point and was able to hold it, even if it went up, the person would have been in massive profit at here. This is Bitcoin. This is, at this point, we have Bitcoin at $113, $113,000. And at this point, we are having Bitcoin at $108. So this is a doji. Now let's look again if we can find another one. Remember that a doji also is a reversal trend pattern. This is a
ma'am. There's a
doji.
doji there.
Sorry?
That's it.
This is a doji, right?
Yeah.
And when it happened at the
Yes,
uptrend,
ma'am.
what happened? The
A
trend
reversal.
passed. There was a reversal. Okay. Is this a doji?
No.
Okay. Is this a doji?
Let me see. Which one?
Is this a doji?
No. Let me see. Okay, wait.
This one, is it a doji?
Yes.
I think so.
What about this one?
Which one?
This one?
No,
Are you sure?
no.
Wait.
Okay.
It's a candle.
Is this a doji?
No.
This
Yes.
one, is it a
I
doji?
Yes.
This is a doji. What about this one? What about this? Is it a doji?
No. Okay. Yes.
So these two candles, are they doji candles?
Yes.
Kosi, do you agree with him? Kosi is not in this one. Ezekiel, do you agree with him that these two candles are doji candles?
Yes, they are dodgy candles.
Maybe make the background white for easy visibility. If the background is white, is that when you will see it? If you are not seeing this black one, are you guys not seeing the screen very well?
We can see it now.
So what are you saying? Okay, so let's go again. Is this a doji? First and foremost, where is a doji supposed to form? When you know it is a doji, a strong doji, it forms either at the bottom of the trend or at the top of the trend, not at the middle. All right? Remember that firstly, a doji is supposed to be what? It is supposed to tell you, it tells us that the market opens and closes at the same price. There is an indecision in the market. Then he said, this is where it's supposed to form, at the top of the trend or at the bottom of the trend. He said, the formation indicates that buyers are unable. This indicates a trend reversal. So it should form at the bottom of the trend or at the top of the trend. So when a doji happens at the middle of the trend and the trend continues, it simply means that the doji was not a strong one. Are we together now?
Yeah.
That's what it simply means. It was not a strong one. So let's go back. I think this thing I put here, okay. Let's see again. Is this a doji?
Let me see.
This one.
Yes.
Are you sure? Are you sure it's a doji? Okay. Let's take it down to 4-hour time frame, 1 hour time frame. Is it a doji? You see? A doji had to form here. And then boom. It formed at the bottom of the trend. And then there was an uptrend. And here, a doji had to form here. And there was a downtrend. So at this point, you see, the downtrend continues. The downtrend continues. It's still going down. It's still going down. There are other dojis that form. They are showing that this is a strong downtrend. It's still going down. It's still going down till here. Still going down. Since ever that doji formed, the market has not reached that point again. It has still been going, it has just been going down under 1 hour time frame. Not until this one formed here. Can we go back and check? where that doji took place. Hope you will remember. Good. This is where it formed. It formed at 112,000, right? 112,260.
Yes.
Then there was a pump to 117,255, right? And then it continued at this point, going in between there until a doji formed here. And there was a dump from 117, it came down to 115. From there, it came down to 114.5, right? From there, it came down as low as 110. From there, it came down to as low as 108, 108.5. It came up to 112. But remember that the highest from that time that doji happened is 100 and the highest it went after the doji it was 117. So it came up to 108. Now it's down to, it's still down. It has not still hit that point again. 113 is still going down. It came down here to 107. It's still going down. It's still here, 108.5, 108.4. So you see that after the doji, before it's still gonna, oh no. The market is still going to dump. There's still a big dump. At least it will regain 90 something. It will retest 90 something. If you notice, what do you call this kind of market? I talked to you about it yesterday. What do you call this kind of market?
Ranging markets, or should I say it is because it is consolidating?
Is it consolidating? What is it consolidating on? It's not a consolidation.
No, I mean from this point.
So
Okay.
there's a name I'm looking for. What do you call it? You said ranging market, okay? Ezekiel, what do you call this kind of market? Ezekiel.
Yeah.
What do you call it?
Chop.
Okay, Prime say choppy market. Is it a choppy market? You could say from here, you could say from here to here is a choppy market. You could say from here to here is choppy, but from here to here is a range. It's a ranging market since it's 1 hour time frame. So there are people who would tell you don't trade this zone because it's a zone of indecision. It's a zone of indecision from here. See, the easiest trade to make is the trade that you have clear indication of where the trend is going to. Clear indication of where the trend is going to. What's even the difference between choppy and ranging market? I explained yesterday. A choppy market is a market that, okay, the difference, right? Good. I like that. He said, what is the difference between a ranging market and a choppy market? This is a range. A ranging market is a market that is just in between support and resistance, that is happening between support and resistance. Some people trade, I do trade ranging markets. I trade ranging markets, but I cannot trade a choppy market. And that choppy market actually mostly is seen on stocks, on when you're trading forex. That's where That's why you usually use the name choppy market. In crypto, it's either you're having a trending market or a range market, a ranging market. So most times, this is what you see in crypto. But some people still trade it because there are people, especially in scalping. This is where scalping is interesting because you can easily find your support and resistance and then trading between the support and resistance. I don't know if anybody grabbed this thing I'm saying. This is a strategy.
Yeah, understand.
Good. You can trade in between this support and resistance. As long as you've identified your support and resistance, measured it, then you can trade in between.
For scalping.
For scalping. It's not for long
Yes.
it's not for long trade. It's for scalping. You look at your 5 minutes and you don't trade it under 1 hour. You trade it for between 5 minutes, 1 minute. Good. Look at the 5 minutes. This same market now, look at the 5 minutes. Look at it. Now you're understanding my point, right? If I enter this trade at this point, I enter at this point, I can look to take my profit at this point. So if I have already seen, now this is a retest. This is a retest, right? This is the first one, right? And then it went up again. So if we are trading under 5 minutes time frame, I can bring my this thing here, my resistance here and support here. So now the moment I see this and there's a retest here, I can wait for it to be sure. I wait for it and this happens, right? Remember, a support is not a specific point. It is a range of points. A resistance is not a specific point. It's a range of points. So the moment I do that, what do I do next? I place my resistance here. The first resistance is hit. Then I can now decide in between here. I can still decide to trade it because there is a long distance between here and here, right? I can still decide to trade here because I am trading a very short range. I can still decide to trade between here and here. But that is when you're trading under 1 minute. You use your 5 minutes to do your confirmation and use your 1 minute to trade. This trade now under 1 minute, look at it. Good. Under 1 minute, look at it. See how it entered perfectly under 1 minute. And I can trade between here and here under 1 minute. But the thing is, the moment this one hits, this is the second hit. This is the first breakout. This is the second breakout. This is a retest. This is the third one. And it went and broke out. So at this point, if I am trading this, I don't wait for these breakouts to happen because I am trading a very tight zone, right? All I need to look out for is in between these candles here that formed, multiple candles that formed. I know there is a soft resistance there. I don't know if you're grabbing my point. It's a strategy. If you take it into seconds, you will see what I'm talking about. Let's take it to 30 seconds. There's a soft resistance in between those. Okay. They're saying we cannot take it further. So there's a soft resistance here. So instead of me waiting until this place hits, until this place, since I am looking for 1 minute candle, I put my trade here. I trade these candles. Let me enlarge it so you see the candles. I hope we are following, guys.
Yes.
So instead of me to wait, I look at this point. I notice that there is a resistance here. The moment this resistance forms here, I know there's going to be a dump. You see, the resistance is now a range on its own. I know there's going to be a dump. So I enter my trade here and boom, it goes down. Remember, it's under minutes. So it will not take long for this to happen. In a few seconds, it has happened. You take your profits. And then you can enter another one. Boom, it goes up. You take your profits. Do you understand it? At this point, you're just picking your profits in between. You're not waiting for, you're not, and your profits may not be much at this point when it depends on what you're trading. Your profit may not even be up to 1x. It may be 0.5x. It will be a movement of 10, 15%, 20%. You go out of the market, come back again. You pick 30%. This place, it's very within few minutes, you have gotten your target for the day and you're out of the trade. But it's a very risky one because you need to analyze the market and know that the market is at a resting zone for this to happen. Yes?
Can I ask a question?
Go on.
Can you hear me, ma?
Yes.
Okay. When there is a breakout in neither the resistance or the support, what happened next?
When there is a breakout.
Yeah.
As long if the breakout is on the resistance, if there's a breakout on the resistance, the first breakout, you can call it a false breakout. The second retest on that breakout, you still watch it. The third breakout is now when you know that it will be a trend reversal.
Okay.
If the breakout happens the third time, you know it's a trend reversal. There's going to be a reversal. So just like here now, you see, now we can, or the Forex trader will call this thing a choppy market, might call it a choppy market. But there are people who they love trading this point. I'm not saying don't go and trade it because it's a very stressful trade. You see, this point now, 1, 2, 3, 4, 5. They have picked 5 candles. And they easily do this kind of thing on Forex. Scalping is very sweet on Forex as well. 1, 2, 3, 4. Before you know, pick 5 candles and you're out. But the challenge most people use to lose money in this trade is that they don't know when to leave the market. Now, at this point now, there's a breakout from here to here. You see, there's a retest here. There's a retest here. And then, at this point, the support is forming here. A support zone. This is a zone. A support is not a point. A support is a zone. A resistance is not a point. A resistance is a zone. So this is a support zone that formed here now. Here is a resistance zone. When it formed here, it broke out there. So this tiny, tiny resistance and supports, this is a support zone. So when you see this thing happening and happening and happening, inside that support zone, you still need to check out the candles within there to know if they are worth it. Now, when you check out bullish engulfing, you will see that if you take out your time, you see that you will still find some bullish engulfing inside here. And that will give you information of what the market is looking like. Then when you see that, you also see Doji here. That will now tell you if this market is going to go up at this point or come down, even though it is a 1 minute time frame. Look at this point now, a Doji formed here. And when this Doji formed here, what happened? The market went down, came up again, but did not hit the original entry price and started going down, started dumping. That's why it is under 1 minute time frame. It's still dumped. Imagine you enter this market here at 108,659. Imagine you enter this market when this doji formed, when you saw this movement. when you saw this doji here, you saw this, you entered the market and left it to this point. This would have given you something. So my point is, even in trading, this, it depends on your time frame. This kind of trade now, you don't leave it for days. It's not a trade you leave for days. It's a trade you leave for minutes. A 5 minute trade, a 1 minute trade, you have to confirm it on the 5 minutes time frame. And a 5 minute trade, you have to confirm it on 30 minutes time frame and 15 minutes. A 1 hour trade, you confirm it with 1 day, with a daily time frame and 4 hour time frame to know the trend it is going. Then a 4 hour trade, you confirm it with weekly time frame and daily time frame. A daily time frame, you confirm with monthly and weekly. So if you are trading 4 hours, it means you're going to be in that trade for over a day or almost a whole day, which is 24 hours, from 8 to 24 hours. So if you're trading 1 minute, you don't leave the trade for 1 hour. You don't even leave it for 30 minutes. Because by the time you leave it for 30 minutes, your setup might be cancelled. It will take you off the market. Are we following?
Yeah.
Let's go back. I hope you guys are grabbing something here. The ladies are no longer interested because this one is difficult for them. They want to trade. Okay, let's go back to Doji. So we were identifying Doji. What did I say Doji is again? Talk to me. What did I say Doji represent? Apart from Chigozie, Divine. What is a Doji candlestick? Divine, can you hear me? Divine. Divine, Ezekiel, can you hear me?
Yes, I can hear you.
What is a Doji candlestick?
Okay, in Doji candlestick, the opening price and the closing price are the same.
Okay, so when you see that on a downtrend, what does it signify?
Signifies a bullish movement. That's the reversal.
Does it signify a bullish movement, or it tells you that there is going to be a bullish movement?
Yeah, it tells you there's going to be a bullish movement.
Okay. Prime, I hope you're following. Oh my God. Somebody's daughter is tired. Prime, I hope you're following. Okay.
Don't be offended. You called it an indecision candle, or there's something else you called it. What's the second name?
It's an indecision candle. It's an indecision.
Or what?
A doji is an indecision candle. It's an equality candle. It shows equality in the volume, in the market volume, and equality in buyers and sellers. That means the buyers are equal to the number of sellers. There is an equality in between buyers and sellers, and at that point there is indecision in the market, because the market is now trying to find out which way to go. That is a dodgy candlestick. Okay, let's go on. The next candlestick is what we call the dragonfly. The dragonfly. The dragonfly doji So the doji candlestick, we have the doji candlestick and the dragonfly doji candlestick. So the dragonfly doji is a bullish candle pattern which is formed when the open high and the close are the same or about the same. They are either the same or about the same. What is the difference between the doji and the dragonfly doji? Now, the doji, they are telling you that the open and close are the same. The dragonfly is the open and close are either the same or about the same price. So it simply means that this is a doji. This is a doji. This is what? A dragonfly. This is a dragonfly. They are the same or about the same. Now this one has also, this is a hammer. We'll still get to that. So let's go back to our book. So when you see a dragonfly, look at a dragonfly, what it looks like.
You can't see the book now.
You cannot see it. Oh, sorry. You're supposed to see my entire screen. So why are you not seeing the book? Can you flip the book now? Can you see the book now?
Yes, ma'am.
Okay. So this is a doji candlestick, a dragonfly doji candlestick. And a dragonfly doji candlestick only signifies one thing, a bullish trend. It is a bullish candlestick. Let me read it again. The dragonfly doji is a bullish candle pattern which is formed when the open high and close are the same or about the same. What characterizes the dragon doji is the long lower tail that shows the resistance of buyers and their attempt to push the market up. This is a doji, a dragonfly doji. So when you see this, you know it's a dragonfly doji. It means that the sellers and the buyers pushed the market up to this point. It opened and went down, but the buyers pushed it up to this point before the market closed. It simply tells you that it's a bullish trend. There are more buyers in the market. That's what it's saying. It said the illustration above shows us a perfect dragonfly doji. This one is a perfect dragonfly doji, but in the market, it is rarely like this. So the long lower tail suggests that the forces of supply and demand are nearing a balance and that the direction of the trend may be nearing a major turning point. See example below to indicate, all right. It said to indicate a bullish reversal. To indicate a bullish reversal created by a dragonfly doji. So see the example below. Hello? Please, I have to call you back. I'm in a class. So this is a dragonfly. Are you seeing the gist now? But when you were looking at this thing here, this is what you saw. But see what it shows in the market. You see, the head is a bit bigger. And there is a pointing out. But that was not what was. This is a perfect dragonfly. So, and most times, this does not really take place exactly the way it is in the market. So you see this is a dragonfly. This is a dragonfly. Now, this one happened in a downtrend. And it shows a trend reversal upside. Am I audible?
Yes, ma'am.
Okay. So this is a dragonfly. The chart above, the market was testing the previous support, which is a dragonfly usually happens on the support, at the support level. That caused a strong rejection from this area. So a dragonfly tells you that there is a rejection at the support level. The formation of the dragonfly with the long lower tail shows us that there is a high buying pressure in the area. So there is a rejection here, meaning that the buyers are accumulating. The buyers are accumulating, buying. There is a buy pressure here. So this buy pressure is going to change, is going to cause a trend reversal. Remember, it was a downtrend all those while, right? Are we following?
Yes, we are. Yes.
So if you can identify this candlestick pattern on your chart, it will help you visualize when support and demand are located. When it occurs in a downtrend, it is interpreted as a bullish reversal signal. But as I always say, you don't trade candlestick pattern alone. You need other indicators and tools to determine high probability dragonfly signals in the market. So let's go to the market and check out for dragonfly. So follow me, show me the dragonfly here. So let's see, we are on the 4-hourly time frame. Should we use 4 hours, 1 hour, or 5 minutes? Which one? Let's check for a dragonfly. What is this one? Can you see my screen very well? Okay. Okay, Prime said this is Doji. Okay. Let's look for dragonfly. When it happens at the downtrend, it shows a bullish reversal. Okay. Is there any dragonfly you're seeing?
Yeah.
Where?
At
Use the timing below to tell me where.
14.
At 14. At 14. Where is the dragonfly? This one?
Yeah.
Is this a dragonfly? It is supposed to show, is this really a good dragonfly? Because it's supposed to show us
No. It's
the
not a
red
good
candle at
dragonfly.
13. The guy said the red, please use the comment section. The red candle at 13. This is 13. Which of the 13? The red candle at 13. The red candle. This one. This one. That's a dragonfly. Really? Okay, this one is a dragonfly. Why do you say so? Let's check. Was it a is this the end, or is this the bottom or the up of of a trend? What trend is this place showing you? This is an indecision point. Is a ranging point. So will you say this is a dragonfly? It could be a dragonfly, but it's one that did not affect the market. Chigozie, what were you saying? You can unmute and speak.
I've forgotten what I want to say. When I remember, I will speak it out.
Okay. So any other dragonfly? See, it must not be that you will find these things easily on this thing. That is why when you learn, you pick out the ones you want to use for your strategy, and then you let the others rest in righteousness. Okay, so now there are these three, we've talked about the doji, the dragonfly. Let's talk about the gravestone, doji, because these three are the same family. You see, they are answering the same father's name. The Gravestone Doji is the bearish version of the dragonfly. So the dragonfly is up. That means the cross is on top. The gravestone is this. This is the gravestone. It is also a doji, but a gravestone doji. Are you with me, guys? This is a doji. Here is a doji, but this one is the normal doji. This is a dragonfly. This is a gravestone doji. A dragonfly doji. A doji. See how it goes. Oh boy, I'm not so exhausted. He said, the gravestone is the bearish version of the dragonfly. It is formed when the open and close are at the same or about the same price. What differentiates the gravestone doji from the dragonfly is the long tail. The formation of the long the formation of the long upper tail is an indication that the market is testing a powerful supply or resistance area. The long upper tail, which is here. The market went up, tested this place, and came down. There is a resistance here. It has formed a resistance here. So what he's saying here is that the formation of the long upper tail is an indication that the market is testing a powerful supply or resistance area. So when you see the gravestone, it shows you a bearish trend. It gives you a bearish signal telling you that it is going to go down. So let's check it out here. If the doji, if this is a doji, let's check under 1R if we will see a clear one. What is this now? Unmute your mic and speak. What is this? Is it a doji, a dragonfly, or a gravestone?
Now, which one is it, the red or the green one?
Okay, you're not seeing it.
I can't see it clear. It's too far away.
Right.
This is what I'm talking about. This one here. This one here. This one.
A dragonfly.
Who
That's
says
the
it's a
dragonfly doji.
dragonfly? Okay. That Divine, did you say it's a dragonfly?
Yes, ma'am.
You got here, you say it's a dragonfly.
Yes, ma'am.
Ezekiel, what do you think?
Yeah, it's a dragonfly.
It's a dragonfly. Okay. Let's look for another one. So which one is this? This
I
one.
can zoom it.
This one.
That's a gravestone doji.
This is a gravestone.
Yes.
And this is what? If
Dragonfly.
this is a dragonfly, this is a gravestone.
Yes.
You agree? You say yes?
No.
This is what?
The green one. The green one is a gravestone.
Okay. The red one is what?
This red one is a dragonfly.
It's a dragonfly. Okay. Okay, you're correct. Let's go again. Which one is this?
You move to the closer so we can see where.
Okay.
I will call it. Where is it again?
This one. Which one is this? This one. Are you not seeing my screen?
Dodgy candle. Dodge.
Is it dodgy? Hmm. Is it really dodgy? It's a dragonfly.
It has a longer week.
It has a longer week, yes, but it's a dragonfly. It's a dragonfly, not a dodgy.
Yeah.
It's a dragonfly dodgy. This is a dragonfly dodgy. This is a gravestone dodgy. This is a dodgy. See a dodgy here. This is gravestone. This is dragonfly. This is dragonfly. Are you with me? This is a gravestone.
Yes.
This is a gravestone. Okay. So this is how you identify this. This is what? A dodgy. This is a gravestone. This is a gravestone. This is a gravestone. This is a dragonfly. This is a gravestone. This is a dodge.
Dodge.
So you have to identify these things very well so that you know. A gravestone represents a bearish, talks about a bearish trend. He said the image above illustrates a perfect gravestone dodge. This pattern indicates that while buyers were able to push price well above the open, later in the day sellers overwhelmed the market, pushing the price back down. This is interpreted as a sign that bulls are losing their momentum and the market is ready for a reversal. So a gravestone shows you a reversal trend. A doji shows you an indecision. And a dragonfly shows you what? A reversal trend to the upside. Are we together?
Yes, ma'am.
A gravestone gives you a reversal trend to the downside. A dragonfly gives you a reversal trend to the upside. And a doji gives you an indecision.
Decisions.
So when you see a doji, there's an indecision in the market. When you see a gravestone, there is a reversal trend to the downside. It is a bearish trend. It's a bearish signal. When you see a dragonfly is a bullish signal. All right?
Okay.
So we have treated how many candles now? Mention.
Doji.
Doji.
Gravestone.
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 Eh?
Dragonfly.
Dragonfly. Yes. Yesterday's own.
Engulfing, bullish engulfing and bearish engulfing bar.
Bullish engulfing bar and bearish engulfing bar. We've treated 5. And each one of them, doji, indecision, gravestone, bearish signal, dragonfly, bullish signal, bullish engulfing, bullish signal, bearish engulfing, bearish signal. Are we together now?
Yes, ma'am.
Okay. I'm supposed to wrap up everything about candle today with you, but it's not possible. So with this now this is what we call price action trading. That is why I can trade the market without drawing all these lines that Forex traders draw and fill their screen with a lot of lines. I can trade the market without all those. Because the candles alone will give you the signals that you need. Are you with me? Candles alone will give you a lot of signals. Okay. So let's check again. Let's try bullish engulfing. Can someone show me a bullish engulfing? Can we have a bullish engulfing here? Remind me again, what is a bullish engulfing? Okay, you cannot see the screen.
Yes, please, can you zoom in?
I should zoom in. With all these things that I'm using laptop to do, the zoom is still not clear. Why is that so? Okay, so can someone remind me what a bullish engulfing is?
We have a bullish engulfing. It means that the market is about to
No, I mean the candle that shows you a bullish engulfing. What is it? The candle that indicates a bullish engulfing.
Bullish candle.
You said? There are 2 candles now. It's not one.
The bullish candle.
The bullish engulfing. Can I talk or is someone talking?
Yes, go on.
The bullish candle consumes the whole of the bearish candle.
When a long bullish candle engulfs the smaller bearish candle, it is a bullish engulfing. It tells you that the market continues in a bullish pattern, in a bullish trend. While the bearish engulfing is when the what?
The bearish
The
candle
longer
cover.
engulfs
Okay.
the smaller bullish candle.
Okay, so let's look for a bullish engulfing. Can we call this a bullish engulfing? This place. Are you seeing my cursor?
Mm,
This is a
Which
good
one?
bullish engulfing. This is a bullish engulfing. Because after now, the market continues to go up for some time before it went down. Look at it here. This is a bullish engulfing. The candle, even the wick of the candle swallowed the totality of this candle. But this is not a bullish engulfing. Are you seeing the difference?
Mm. Yes,
Are
ma'am.
you seeing the difference?
Yeah.
What is
Yes,
the
ma'am.
difference? What's the difference?
The
The first one, the wick, this bearish candle, but the second one, the wick, does not follow the smaller candle.
Okay. So that's a bullish engulfing. Let's look for a bearish engulfing. Let's look for a bearish engulfing. Is this a bearish engulfing?
no.
Okay. Let's look for a bearish engulfing. Is this a bearish engulfing? Yeah,
Yes.
Yes.
it's a
Yes.
bearish engulfing. And as you
Yes.
saw, when it's a bearish engulfing, it went down. Okay.
ma'am.
Then let's look for the next one. The next one is what? A doji. What is a doji again?
Mm.
What does a doji represent?
Is that in indecisive markets?
A doji represents an indecision market. Mute your mic. I can't hear you well. Use the comment section so that I will hear you. A doji represents an indecision market. It represents an equality market when the market is indecisive of where it wants to go. Now look at this place. This from here now, from here to here, you notice that there's a range. There's a range here, right? Right? There's a range in this market. So there is a kind of indecision. There's a kind of indecision here. Right? Now, in this range now, this is under 1 hour time frame. Look at this. Look at this candle. What does this candle signify? This candle, a dragonfly, which tells you what? Which signifies what?
A bullish, is it referable?
A bullish trend, a bullish reversal. It tells you that the market is about picking to the bullish side. Mute your mic.
Yes.
The market is about picking to the bullish side. Then we have the dragon, which this is the dragonfly. Then we have let's see if we have a doji anywhere. Do we have a doji anywhere? Which one is this? This is a bearish trend. The gravestone. But you notice that this gravestone, the wick of this gravestone is not very long, and it simply tells you that it does not hold, the signal is not strong enough to break the trend. So when you see a doji, a gravestone and a doji, look, for instance, look at this. A gravestone and a doji. So these are the things you need to watch. This is when you are trading price action. But in all your trade, ensure that you don't trade with a single candlestick. You cannot trade wonderfully with a single candlestick. You would only burn your money. I think we will call it a day here. I'm so exhausted. I want to go and rest. Please, can we call it a day? On Monday, we will continue with the morning star and the rest of the candlesticks on Friday. Right? Can we call it a day? We'll finish everything that has to do with price action on Friday. Yes,
Is it
please.
Monday or Friday?
Okay,
No, not Monday. Monday is another set, a class for other people. On Friday. On Friday, your class is on
okay,
Friday and Saturday. So by then, everyone should have become ready for it. And then please go to our let me pause the recording now. So there's no question again, right, on this? Is there any question on this, on what we've treated today? All right, no question on it. Let me pause the. So please, I will need you to go to our YouTube handle. The class for yesterday has been posted there. Go there, follow us on YouTube, comment and like our post. All right. Follow us on YouTube, comment and like our post. You can also rewatch the class of yesterday. It was an interesting class. You can also watch it, and then, if you have any question, you can as well ask your question. All right. So in the absence of any more question, you need to identify 5 doji candles, 5 dragonfly, and 5 gravestone on Solana, Bitcoin, Ethereum, BNB, and Arbitrum. Did you hear my question?
sorry, you can't do it.
Let me repeat again. Identify 5 doji candles. Identify 5 dragonfly. Identify 5 gravestone on these tokens: Solana, BNB, Ethereum, Bitcoin, and Arbitrum, ARB. Please drop the question in the group so that others can see it and also do it. So this assignment, please put it as a PDF. Don't send it to me one in my DM. It's very, very scattering. I couldn't attend to Ezekiel's own because it was too scattering. So put it together as a PDF in one PDF and send to me so that it will be well organized. I repeat the question again. Identify 5 doji candle, 5 dragonfly, and 5 gravestone on these tokens, on these coins: Solana, BNB, Ethereum, Bitcoin, and ARB. Identify them, mark them on. When you go to trading view, you bring them out. When you see them, you mark them on trading view and also send, put it as a PDF and forward with your name inside. So with that, and then to add to that question, tell me, when you do the identification, tell me, does that signify a bullish trend, a bearish trend, or an indecision market? What does it signify? When you identify the candle, you tell me what it signifies in that particular market. For each one of them, identify them and tell me what it signifies, what it is saying in that market. All right. Is the question well understood? Chigozie, did you understand the question?
Yes, I do.
Yes, ma'am.
Divine, you understand? Ezekiel, do you understand the question? Ezekiel, are you in this class? Okay. All right. Since you all understood the question, we meet again on Friday. Till then, do have a beautiful night rest, and don't forget to complete your payment. God bless you.
Thank you, ma'am. God bless you.
Please, I also need you to go and drop your review in the group.